if you look at what we do, every decision we take is focused on one product, which is the option suite, which means faster processing, better margining, better, more efficient cross collateral, safer custody, etc. Everything for the options side. And if we can't rhyme that with our strategy, we don't do it, which means opportunity loss, revenue loss, but protection of what we're good at. And I hope that we can keep this momentum and this focus on options going forward.
Welcome to another episode of Deribit Decoded. Today, I'm actually super excited to introduce, a guest that we've gotten a chance to work together over the past year. Luuk Strijers. Am I saying that right? Strijers. All right. So Luuk joins us on this episode. I'll let him obviously introduce himself, but Luuk is Deribit's CEO. He also happens to be, on Kemp's board, and a big proponent of obviously the movement around the options being visualized altogether. Luuk, thank you for joining us today. How are you doing?
Thank you for having me, and compliments on the almost perfect pronunciation of my name. My name is Luuk Strijers. It's Dutch, especially the surname is a bit difficult to pronounce, but there's hardly any of us, so it's a very niche name.
Beautiful. I tried, and I think I'm almost there. So Luuk, let's talk about a lot of different things. But honestly, before we jump into a lot of the questions that I might want to dive deep with you on, I usually start off with giving a chance for our guests to kind of introduce themselves in terms of how they got here, right? I think we'd love to learn more about how did you end up being in that seat over at Deribit? How did you kick off your career? And sort of what got you more and more convinced to jump into digital assets in general?
Sure. I started working, it's actually 21 years ago already. Studied in the Netherlands. My first job was in Amsterdam, capital markets, fundraising, listings, that kind of stuff. We did it for around 6 years. After which I moved to a company that no longer exists, but was a competitor of the Dutch options exchange, a company called TOM, which was owned by firms like Optiver, IMC, Nasdaq, and we got 50% market share in the Netherlands, all trading options. I was responsible for markets and clients. So we traded index options and single stock options. After that, I moved to Singapore. So I was with SGX, the Singapore Exchange, for 4 or 5 years. This was 2014. And then in 2019, I joined Deribit as Chief Commercial Officer, and about 2 years ago or so, I became CEO. I ended up in this spot because within SGX, those years, that was at least my first recollection of crypto trading. And you might recall 2017 when everyone started buying all these coins, etc. I was one of them. And I wanted to do more professionally. We looked at Bitcoin ETF back then already, but that was difficult in the Singapore landscape. From a company perspective, as well as the rules, ETFs need to be diversified, so you need permission to have a non-diversified ETF. But at least I got excited back then already and wanted to join something in this space, which happened to turn out to be Deribit. We were with 20 or so, staff-wise relatively tiny or very tiny, performance-wise also still small. But 2019 it started growing, so I came at the right moment when institutional adoption, albeit massively exaggerated over the years. It all depends on how you define institutions, but it was more than retail. It was many hedge funds started out with $1 million allocated. So those days is when I started, and Deribit was successful in its way, but I tried to bring my institutional knowledge from the platforms I worked for before, which Deribit didn't have yet. So I think it was a great combination, and it led to where we are today. So it has been an interesting ride, to say the least.
So I guess sounds like you joined right at the perfect timing almost in 2019, but what really got you sort of bought on the idea of options in the space? Because obviously at the time, options were still almost, very, very limited. And the path towards massive adoption meant that obviously there had to be a very strong conviction on sort of, this is the right thing, this is where institutions are going to be coming into, right? Why Deribit specifically?
So the 10, 15 years before, I was always been involved in trading and derivatives one way or another. So 5, 6 years in Amsterdam, options, index options, futures, single stocks. In Singapore, I was responsible for products which were like leverage products, warrants, which is it's like issued options, so essentially comparable. So I've always looked at trading from that angle. And when you look at the markets out there, there's many nowadays, but back then it wasn't that many. So Binance didn't exist, FTX didn't exist. So far, nothing much changed. But you had BitMEX, you had a few Asian exchanges, but you didn't have the institutional angle. And my background was institutions, so it wasn't the retail space, but the institutional space. So if you look at what market and what product is more attractive to institutions, that's options and futures. It's the let's say standard go-to product for any market out there. Look at US, look at Europe, look at India, look at China, whatever market you look at, institutions trades options and derivatives. So, and Deribit was tiny, but in essence and product-wise, very promising. So, and I like a smaller size company because you can actually have a value add. So, for me, the attraction was great because product-wise and market-wise, there was a lot of opportunity because if the market would continue growing, and Bitcoin was, I think, a few $1,000s back then. So if you look at where we are now, that has happened, and many institutions that are active nowadays weren't back then. So a lot of that growth was happened afterwards. So it was a very exciting time, and I think me and not only me but many others recognized that back then as in a massive opportunity, and people started doing what they did best, but then in the derivatives, crypto derivatives landscape. So you saw new startups, all these firms like BrockTech, which is the big spin-off from a large options market maker, Wintermute, and all of those kind of companies were founded back then. They weren't active 10 years before. It was that moment that allocation started happening. So yeah, many people made the same decision as I did, which led to where we are today.
So how do you see the evolution of the infrastructure, the products that are available, the market sort of dynamics, the capital efficiency, everything that actually makes options trading work the way it should work? How do you see the evolution of things like changing from 2019 to 6 years, fast forward?
If you compare what we had back then and where we are today, it's like incredible what has happened. Not only on the Deribit side, but the entire market. So when we started, the platforms weren't there, and the platforms that were operating, including us, they had, let's say, somewhat mediocre performance, including us. We had more downtime that we're proud of. Not terribly painful, but we had performance problems. We had less performance problems than many others, which allowed us to grow and get some market share. But back then it wasn't about product performance, about margin efficiency, all of that. No one was talking about it. Volatility was crazy. The number of orders and the number of clients that were getting activated were large, or perhaps larger than many of us could handle. So it was about platform performance. And once we and the rest got that under control, those secondary arguments became more relevant. So what we did well over the years, and we were, I think, the first one out there, was portfolio margin. So offsetting positions versus other outstanding positions. You buy some positions, you're long, you're short, you have delta, so you have futures, and all of that together, you price shock, you vol shock, and that's like your overall margin. That component is, if you look at the perpetuals platform, it's not that relevant because the correlation is not high, and the real need for having those features is not high. But in the option space, it's essential, because otherwise you can never have a proper functioning solution without portfolio margin. So back then we were launched in 2016. And of course, we had 100% market share because there was no one else back then. But also in 2019, there was still no one else. So when I started, we had 100% market share, but volatility was so high that not many people were able to trade it and were challenging it. And over time, our success grew and open interest grew, volumes grew, and we got challengers. And nowadays we have all of them. So we have CME, we have Binance, we have Bybit, we have OKX, and we have multiple others in the list, including various DeFi solutions. And all of that combined is us still having 75-80% of the market. So it's been a tremendous run over the years because we had to fend off our product and improve it and keep improving it. So we changed data centers. We are now, I think we operate 15 racks or so in Equinix LD4. It's a massive amount of servers and data and connectivity that we run, where clients can host their servers in our racks, where we have multicast, where we have integration with AWS, so you can connect AWS Tokyo to our platform without ever touching the internet. We have a lot of solutions like that set us apart. We have market maker protection, which means automatically pooling your orders. We have a lot of features that are not standard for mass retail platforms, and that's what's developed over the years. So where what you've seen since 2019, I think that we split ways with many of the others. We are not cloud hosted. We have dedicated hardware. We have custody of choice. We've onboarded, I think, with 7 custodians nowadays to service the institutions. We have these features that I just mentioned. We have cross collateral. We have yield bearing collateral. We have the things that on the retail platform are irrelevant. I don't think anyone cares about yield bearing collateral. Or of course, a few people do, but it's not for the masses. And for Deribit is what makes us different. And that's what we've done over the years, and that's what we will keep on doing. So we will never be Binance, and we will never have 1,000 spot coins, and we don't need the meme coins, and we sacrifice a lot, because I'm not saying it's not interesting. From a market perspective, of course, all of that is interesting, and what they've done is amazing. But if you look at what we do, every decision we take is focused on one product, which is the option suite, which means faster processing, better margining, better, more efficient cross collateral, safer custody, etc. Everything for the options side. And if we can't rhyme that with our strategy, we don't do it, which means opportunity loss, revenue loss, but protection of what we're good at. And I hope that we can keep this momentum and this focus on options going forward. So I think if you look at many of the other platforms, and that's what also makes it difficult for you, because many of them have different features, and all of them have to have different product teams and have 1,000 people here and there, all of them fighting for attention and capacity and etc. For us, it's all focused on one part. So we don't need to manage all of the other supermarkets. We're like one niche store which allocates everything we have to doing the best we can there.
Have you seen, how was it in terms of a challenge to be able to serve, even with such a narrow scope, right, the institutional demand across different markets, right? Because regardless of, at the end of the day, sure, you're providing your product that most institutions obviously want to be able to touch and interact with. But then depending on the market, right, whether it's like APAC, Europe, right, perhaps, North America, or at some point, they each sort of have their own idea about what is, the right contract specification, what is the right sort of, risk metrics, and, your margining and how you actually work through that. So at some point, right, when you joined in 2019, there had to be a decision that all right, we're going to build this that with the hopes that our biggest market share is in, X, and then we're able to kind of move from X to Y, and then from Y to Z, right? Walk me through sort of that whiteboarding session, because I think it's quite incredible for a lot of people to understand where we were 6 years ago and how the market has matured in very little time.
I think there's a few key components which in our history were relevant. One is let's say platform integrity, regulation, that kind of stuff. We at some point moved from the Netherlands to Panama, and afterwards we moved from Panama to Dubai, where I live nowadays. In terms of offering, 80+%, 85% of our business, whatever metric you use, is institutional. So it's in assets under management, it's in volumes, it's in open interest, give or take those. It's a few percentage points difference here and there, but that's what we do. So our focus in 2019 has been on quality, and it is still. 2019, of course, it was completely different. Quality meant performance. So our problems were latency. If Bitcoin moves, which it still moves pretty fast, but back then it really moved fast. So vol levels were 130, whatever, were standard. And now it's a crisis when it happens, and even then it doesn't reach those levels. It was always like baseline around 100. Those markets we won't easily see, but during those markets, of course, stuff moves rapidly. And on the derivatives platform, on an options platform, when the underlying moves rapidly, we have, let's say, thousands of instruments. Let's say 1,000. If you have 10 market makers, all of them would send 10,000 new bids, 10,000 new asks. And if the market moves rapidly, they do this multiple times per second. So you can imagine the load being generated in terms of data, in terms of processing capacity. That's what we struggled with. And I think what every platform still struggles with. So that's like the 2019 or 18, 16, whatever, but the earlier years. And we got better and better at that. But still, we have way more market makers now. We're processing billions of order book updates a month. It's like one big, let's say, Netflix station where we disseminate data throughout the systems over the internet. It's quite complex. So that's like quality focus on day one is performance wise. Of course, security it got improved massively over the years. The UI, what functionalities you have, what order types you have, all of that, a massive improvement. Stuff like multicast didn't exist back then. So you need like services and tools institutions need. We have a position builder, which sounds easy, but that's like a lot of work, where you can play around with positions. What happens with my position 2 months from now if volatility and price are at these levels, and you can play around with that kind of stuff. That's all needed to service institutions. But beyond that, like more recent needs. So let's say after FTX or even before, the risk of a potential FTX became bigger. Right? So there's always counterparty risk in theory, which for bigger institutions, especially asset managers, so initially, let's say any new market, it starts with proprietary money. So HFT will come and proprietary money in small hedge funds, etc. These people care less about counterparty risk because their exposure is linked. But when you're an asset manager or some other third-party money manager, you would have to look for what happens to your assets, how they're custodialized, security, etc. So we started with Copper Clearloop in 2019 or 20, I believe, as the first platform, I think, doing external custody. And nowadays we have Fidelity, we have Commining, we have Zodia, we have Signum, we have Fireblocks Off Exchange, and I'm missing still one or two. Those needs, that takes a lot of time and energy and legally a lot of work. It sounds simple. So from your perspective, you never see it because you don't care about what happens after you send the trade. It's about the trading efficiency and the order types and all of that stuff. But for us, and in order to service large clients, if a new client comes in and says, if you have whatever X custodian, I will allocate 100 million, we would have to take that seriously, and we have to consider doing it and drop other stuff. So that's like a key thing that has taken a lot of energy over the years. Another one is just ops and procedures, which sounds boring as hell. But stuff like ISO certification, SOC 2, to make sure that your security is put in procedures, your way of operating, your way of releasing stuff, your way of testing. And it's also tested. So you can write down all you want, but you need to verify that the way you actually do it is the way you write it down. That's what institutions need, because they won't trade and they won't allocate large size if you can't safeguard this. And what sets us apart from, let's say, a spot platform is that derivatives is a contract. So a perp you trade, let's say, a second or a minute or an hour, but you don't hold a perp for more than, let's say, a few days. The funding element distorts your P&L, so it's always a short-term product.
Yep.
And futures are long-term products. We have products up until a year outstanding. Mm-hmm. Don't open them to close them quickly unless the market forces you to, because you have to cross spread. So typically people buy these contracts to keep them until expiry because they have a certain view on what's going to happen. That's like a marriage. We engage each other for up until a year. So we need to make sure that this period we have proper liquidity. We have everything in place that safeguards our contract, which is completely different than trading on a spot platform. If you buy one Bitcoin of spot now, you transfer the money, you get your Bitcoin, and you put it on. Done. You're out. There's no obligations towards each other. But if you buy an option, we have a continuing obligation to service you. And that's what we have tried to build in having all the tools and procedures and policies in place, audited financials, to make sure that you trust us in getting married, or at least for a year, but still.
By definition, like, you have to find a way, right, to provide the same performance and like level of operational excellence for a 1-day maturity contract versus a 1-year maturity contract. Like, it doesn't matter. We need to be able to provide the same level of service,
Exactly,
regardless of what contract is being held.
and the full platform will say the same.
Yeah.
Because of course they need to they have the same performance today as tomorrow as well. But if it doesn't, you're not impacted, and in our case, you will be impacted.
Yes, absolutely. I mean, I think it's quite evident, obviously, like, as you walk us through all this, right? Like the amount of work that was required to kind of get to this point in time, right? So it's not just in terms of, being the first. It's also, the hard part is not really coming out first. The hard part is kind of coming out first and actually continuing to be sort of in that lead spot. And obviously, as a lot of our folks that listen to this podcast, right, have seen throughout the industry, many kind of like, experience a hockey stick, and then things kind of like blow up because the foundation was simply not there to be able to withstand as things actually tend to mature. This brings me obviously to part of the conversation I think a lot of folks are very sort of excited to hear about and learn more about it, because all of what we were just talking about, I think, is pretty much was the fuel, right, to get us to this point, right? So 6 years post you joining like Deribit in 2019, you guys announced, right, getting acquired by Coinbase, I believe, a couple of weeks ago. And I think the entire market obviously, was super ecstatic about this kind of sort of approach, because there's a lot of speculation about what that means for options in general in the space. But most importantly, everyone can kind of agree that this is a great thing for the broader sort of spectrum of where this entire space kind of continues to kind of grow. I'd love you to kind of, first off, walk us through, how did you guys come up to that decision? Why agree to sort of like go with Coinbase? Because I can imagine, just like everyone else, you had numerous options, right? Whether it's like strategic, or to continue on a path where you continue sort of delivering the same service and maintaining your position of even going further. So as the CEO, I'd love to kind of like jump a little more to your brain and understand why this path, how did you come up to that decision, and what led to that sort of announcement?
Yeah, sure. I have to be a bit careful here because Coinbase will have an army of lawyers. What happened is that, I think, 2 years ago, we appointed the bank to manage some discussions we were having. So we've had our fair share of incidents over the years as well. And one of them was a company called 3 Arrows, which is a fairly familiar name to many, which is our shareholder, and they still are, but the founders are no longer involved. It's run by the liquidator. So they have a decent chunk of shares. So we wanted to sell those shares and also at the same time generate some founder liquidity. So that's what we appointed the bank for, to have some discussions. That was in 23.
So a couple of years ago, 2023.
Yes, to help us. So not like for selling it. I think 2024. So 2024, early 2024. So they were just managing some of these discussions, introducing us to people, and also being on retainer as a sparring partner.
Good advice. So the initial approach was just like kind of explore what's out there, right? So
what's out there, and so we had some institutional discussions, etc. And markets were still post FTX, so people were not terribly bullish on derivatives exchanges, right? So you might recall the headlines where these sovereign wealth funds had painful episodes, and they wouldn't do it again. But yeah, over time stuff changed. Trump won, which changed the overall, I think, perspective on the crypto opportunity, and that led to strategic interest. So people approached us and wanted to talk. In the end, leading to the announcement we just made. I think for us, what was important is that the view and the ambitions are aligned, and which is building like an amazing product to service the globe. And our products are servicing the big institutions. So for us, it's always been the ambition to get big institutions. So what is holding you back? It's balance sheet, it's regulation, it's whatever, those kind of are. So, and we've done what we can. and stuff like ISO certification, etc., helps tremendously. But of course, a massive balance sheet will help as well. So our goal is to get all of them connected one way or another, whether it's via the custody solution they already have, whether it's via a prime brokerage solution, whether it's via third parties, whether who cares. But our goal is to service the world. And once let's say Goldman Sachs, JP Morgan, the last level takes the decision to start trading as well, we should be the platform of choice. That's what we've always dreamt of. And I think that's what you see over the years as well. The hedge funds, the asset managers, the banks are coming, the private banks, the structured product issuers, the prime brokers are there. Not all of them, but the population is gradually growing, in the end resulting in the investment banks. And in that belief that all of these institutions, the entire ecosystem, would at some point trade derivatives. We always planned what is it we need and don't have yet. That's where Coinbase fits in. We share the same belief that we have an amazing product together, where we have a complete product range, which we don't have, as I mentioned before. We sacrifice a lot of stuff to be the best in a certain area, but we still like to have it. And this way we can have it all and reach those clients that might be otherwise out of reach. So, yeah, that's been, at least that's the idea behind it, and that's why we are fully supportive and positive about the opportunity. Because if we can actually do this and integrate and build something complete, we have like an unbeatable product.
So I can only imagine like some of the questions that obviously were raised, sort of like, even with Coinbase, being an incredible partner for, what a future might look like, work for Deribit. The fact is that it is a US-based sort of company, right? Where, historically Deribit has not been able to serve clients in that area whatsoever. How did you maneuver some of those discussions and some of those concerns? I'm guessing, like, obviously, that's something that you guys are hoping at some point to be able to serve, right? This kind of market.
We always play around with the idea of US, but we're very strict. So in order to safeguard our operating model, we've always been very strict with regards to US. You've seen the penalties and the problems our peers have had. Institutions don't like any of those headlines, so we had to be very strict. 0 US persons on our platform. And who knows, now stuff might change, but initially we will look for the world, excluding the US. And if we can find opportunities and doors might open in the US, it would of course be like the crown jewels of the ecosystem to offer our product space itself in the US as well. But I think you need to have ambition, and that's part of it. But it's not like a no-brainer execution-wise. The rules might be changing in the US, but still they're very clear, and it's very difficult for offshore platforms to set foot in the US.
It makes a lot of sense. But you're a veteran, right, at this point in the space, and you're one of the very few people that have been able to kind of like land a deal like with this. I mean, arguably this is the largest like M&A activity like deal of the space altogether. So that puts you in a very unique position to perhaps have a better understanding of where we might be heading, right? Seeing all these signals. So where do you see sort of specifically the option space, right, like going into the next like 3 to 5 years? So what you've seen like 6 years ago, right? There was a single player, was Deribit. Things were still very immature.
Well, yeah.
There's a lot of work to be done on the platform side, right? To kind of just gain some trust that we're ready to take on, right, the big boys when they're actually showing up. Now we're at the cusp of potentially being able to serve those big boys, right? The question is, where do you see things going? And I know the focus has been purely on the institutional end, right? But also with this new partner, right, with Coinbase, a very large chunk of their user base is actually retail focused, right? Not necessarily just institutional. And I'm guessing that some of that might seep into how options also start being more and more friendly for that side as well. But I'd love to hear your thoughts. Where do you see things going in the next like 3 to 5 years?
So excluding Coinbase, for us, it's a clear roadmap. So we want to cover the globe, and we have our license here in Dubai, and we're filing for MiFID in France. So MiFID allows us to offer our products in Europe as well. The same model we're trying to apply in Brazil, and we will copy paste to the rest of the world where the local jurisdictions permit this. So it's not that easy, because in many jurisdictions there's no proper derivatives framework yet. There's spot, there's some custody, But derivatives trading is typically not properly defined. And if it's defined, it requires a local platform. And we believe in centralized liquidity and not so much a localized copy. So we think the power of our platform, or at least part of the power, is almost unlimited liquidity in one centralized book. But we don't want to book in Hong Kong and Singapore and Australia, all of them separate, because that will, of course, impact liquidity overall. We want it centralized, and we want the people from Australia, from Singapore, from Hong Kong, etc., to trade in these centralized stores. Mm-hmm. And this is what we internally call a hub and spoke model. The hub is Dubai, and the spokes, global spokes, wherever we can, wherever there's a demand. So there's, of course, some countries that are very much interested in options, which is in Asia, several of them. It's India, it's Korea, for example, where you have. So India has Nifty, one of the most traded products globally, options-wise. Korea used to have the biggest contract, Kospi. It's not as big anymore, but the mindset is still there. US, of course, there's S&P. The stocks, the Euro stocks options in Germany are big. So the Netherlands has AEX options. So there's a few of these countries that are like more relevant options-wise than other countries. And of course, we like to be present in those, routing the flow to Dubai. In order to do that, you need licenses, and licenses take time. So, and licenses require a framework that permits. So for us, we will expand. So let's say a few years from now, we will have more of these spokes routing to Dubai, and perhaps we will have mandated to operate in some other countries as well. So we can offer, and offer means you can activate people, the dormant people, or the people that are trading TradFi markets now. They might actually realize that we actually have an amazing product that might be comparable to what they're used to. Because essentially, if you compare our products, we might say we are a blockchain company, but we're not really. We have essentially TradFi infrastructure centralized on a bunch of servers, low latency processing of orders, where simply crypto is the underlying, as well as the collateral. And the fact that collateral needs to, therefore you need to operate blockchains. But if you look at how much blockchain interaction we have, it's not the opposite from DeFi solutions. So that's, let's say, our platform. And then there's the rest of the world. So the rest of the world will have more prime brokers. So I think if you look at the plumbing, it's them, right? So you need the capital and you need the connectivity. If you look at the large hedge funds, the multi-billion-dollar funds, they're not going to operate 10 different markets on their own. I don't believe that. So for them to onboard 10 platforms, it might take them 10 years. It's so much work nowadays. It's mutual onboarding. So we onboard them. We have a decent list of questions, documents they need to provide, but then we need to do the same to them. And the larger the organization, the bigger the team, the more they will ask. Yeah. And they want to know everything, the UBOs, the companies, the balance sheets, all the different entities, and they will never stop asking. So that will take a certain time. But then these guys, they tend to operate multiple markets, so they want to do this times 10. That's simply too much of a burden to them. So I think that they will choose prime brokers. Secondly, they will choose these prime brokers because they're used to doing this. They work with ABN, Goldman Sachs, etc. In the TradFi space, they do this the same way in the crypto space. And these guys will provide them the capital to trade with, which boosts the overall ecosystem. So I think we will either see them growing. You saw one of them being acquired recently. I think there might be more TradFi prime brokers entering, because they will realize the opportunity, and at some point they will get some FOMO, I suppose. The same will apply to data vendors. The same will apply to the rest of the plumbing. So the index providers, whatever, all of that stuff will happen, and we will expand, and we will include all of these solutions, and the entire ecosystem will step up in terms of level of professionalism, including you. So there will be. You will benefit greatly, because this will attract the guys you're looking for. They might use a prime broker, but most likely they want dedicated trading solutions. So all these niche solutions, what happens before the trade, the risk checks, the post-trade, all of that needs to have the same quality as these guys are used to. And yes, we have decent solutions, but not as amazing as the other stuff that's been around for many more years. We need the accountants to have like the audits. If you still see the amount of suffering some clients have, if you trade multiple markets, how difficult it is to reconcile accounts, have the auditor perform the checks they need to. It's all needs to evolve, and that will happen. And that has nothing to do with Coinbase buying us. It's simply part of that trend. Firms will consolidate. There won't be 100 markets going forward. There will be fines and penalties, etc. So there will be a few very large markets left, or a decent chunk of market. But all of them will be more professional. They will offer more services. They offer better partnerships with whatever is needed. And hopefully we can do all of this 24/7 at a cost level that's way lower than a traditional space. Because then I think we truly innovated, because we built something that offers all kinds of instruments. I don't think it ends with crypto. I think it will include equities, include all kinds of commodities as well. Why not? Traded 24/7 with proper liquidity 24/7. I think all of that is within reach. It's not even that far away.
And true global like access, right?
Yeah,
it's okay. That's once so it's like markets become a lot more.
That's why I hope that it remains one pool. So if we can stop this segregation trend, but if we can just have a centralized solution, I think that will be best.
Do you anticipate that the M&A sort of wave of this this year that's been quite massive, right? I mean obviously Deribit is like the latest, like with the largest sort of figure on top, but we're seeing effectively acquisitions almost on a weekly basis now, if not even shorter.
I think there was a lot of fear before. Momentum has changed. I think, yes, you will see many more. There was Ripple headlines yesterday. I think there will be more news, of course. Why not?
Yeah.
The opportunities there, institutions recognize it, both the crypto native ones, they simply want to grow and simply combine stuff, as well as the TradFi firms that want in. You see Robinhood and those kind of firms making acquisitions. I think that won't stop. All of them will want a decent crypto shelf, which they haven't built themselves, so they need to buy. And why would it stop? Momentum is good. Bitcoin price is good, and I think the US legislation and the agenda is positive. So yesterday was a good step again. There will be more global changes upcoming, I suppose, which will pave the way for future adoption. And in the end, these guys, and I know that we said the same 5 years ago, whatever the investment banks they will be there. And the guys, all the steps in the middle, they will be there as well. And we don't need 100%, but if you can get whatever 10%, 20%, it's already a massive increase versus where we are today.
Luuk, this is an incredible conversation, and I think we could honestly continue on for another 3 hours or so. But I want to respect your time, so I want to finalize with a unique, very unique sort of question that can only probably apply to you or very few people in this space, right? I guess with everything that you've done so far, what are the true lessons that you've seen throughout the journey as being part of, Deribit, for instance, 2019 to 2025, where if you had to do this all over again, right, you would do things maybe a little bit differently, right? And the reason why this only works for very few people in the space, because the space itself is, nascent enough where there haven't been a lot of folks that have actually built multi-billion-dollar businesses and that actually land an exit, right? There are very few people out there. So I'd love to, take a moment and hear your thoughts. What has went right over the past 6 years, and what has went terribly wrong that you wish you could kind of go back and just change altogether?
Terribly wrong. I think we had 2 incidents that were terrible. One is the 3 hours. We gave them a loan on too friendly terms, which backfired and was very painful. Another one is we were hacked. Both stores.
Well, if there's any solace, right, it wasn't just you, right? So there was
no, everyone was hacked, but we were quite proud that we were never hacked, and I think for some reason that was the reason, became a bit convinced that we had an amazing setup, and I think those 2 things were like wake-up calls. We changed everything after those 2 events, and they happened fairly briefly after each other. We changed the way of operating towards clients, security-wise, massive changes everywhere. I won't say that something like this can never happen again, because you never know, but we are properly secure and protected against those threats. But those were wake-up calls. Why did we end up here? I think, and that's like the benefit of perhaps luck in a way, being right in the end, is conviction. And that's a very difficult one, because when we started, there were all these new startups like Binance, like FTX. FTX was worth whatever, how much, 30, 40 billion at some point.
Yeah.
And we were not. And we of course, you have your doubts. And should we have done this as well? Should we also go for route A or B? And we said no, but that was a difficult decision. We kept on focusing on options, and we said, if we do this well and the market matures, we will have a head start that makes us unbeatable. But that's a very difficult trade-off. And I think the same trade-off will apply to you and many more niche firms. If you do something that's not massive adoption, this will be difficult. You will have moments when you're in doubt and when you think, should we have done it differently? Should we have gone for the easier route or the easier route? I'm not saying the other routes are that easy, but it's if you see many others doing the same, you always wonder, what if? And in the end, we were right. I'm not saying that's like the smartest decision, because I think odds were against us of ending up here. But that was, I think, for us, the reason why we have this amazing market share and this conviction that we can keep on doing this for a while. We won't have 80% next year and the years after. There will be more and more competition, and these guys have 100 million clients. So of course, they will activate some of them, and the market will become bigger. So the fact that the market becomes bigger and the market share declines doesn't mean that we're losing. We're actually getting a smaller percentage of a bigger pie, and that's all fun. So that's our hope, to get a much smaller percentage of a 10 times bigger pie.
Incredible. I couldn't agree with more with everything you just said, honestly. But the fact is, it is true, right? Especially going through all these dark times in this industry, right, where things can kind of look very grim, and you find yourself faced with a very tough decision, right? And ask and wonder, are we actually doing the right thing, right? Is this the right path? Are institutions really coming, right? The question that everyone keeps on asking all the time. Luuk, this has been an incredible conversation. It's been nothing more than a pleasure having you on this journey, honestly. So thanks for being an incredible friend and backer for early days at Kevin. Thank you again, and hopefully we'll hear even better news post this big news. So thanks, Luuk.